Okay, welcome back into my InvestEngine portfolio update. Now we are in February. I didn't do an update last month, so we're going to get a 2-for-1 bonus special this month in February. There was loads of videos I wanted to get out in the start of the new year, so I've been very, very busy doing that one. But now let's have a look into the account in just a moment before we have a look at the markets first, because I think it's fair to say that 2024 has been quite a crazy start in the stock market. Now, just as I'm recording this video, the S&P 500 at least is nearing that all-time crazy highs and that psychological barrier of nearly 5,000 points. I'll just put this on screen now for you to have a look at. Always makes lots of people very nervous when the stock market approaches all-time highs. Lots of people are very excited. Then lots of people are thinking, is this a good time to invest? And do I really want to be investing in all-time highs? I should wait for a crash. That's up to you. Hey, for me, my personal opinion is always to remain invested for the long run. If you are invested for the long run, you're going to see yourself having lots of all-time highs in the stock market. So personally, I don't try and time the markets, but hey, always up to you. At the end of the day, I'm not a financial advisor. You do what you want. Now, these big all-time highs at the moment are led by just a few handful of stocks. I'll pick out one of them, which just continues to just go up every single trading day, which just blows out everyone's expectations. That is Nvidia. Now, as I film this video, it's over $700 a share, which does make you annoyed when you had lots of Nvidia shares many, many years back and sold them all. But anyway, I'm sure lots of you got those battle stories. But a key thing to remember is, if you are an index fund investor, a global index fund investor, an index fund investor who owns the S&P 500, for example, you will own all of these stocks. So you will benefit when all of these AI stocks and all of these stocks go up in value. So do not worry. It's always important to remember that you don't have to be an individual stock investor. When you own these funds in ETFs, like you have an InvestEngine, or in mutual funds, like you have on other platforms, you will own all of these stocks. Now, unfortunately, from a UK perspective, things aren't really any more exciting. The FTSE 100 or the FTSE 250 are really just flat and doing absolutely nothing. There's really nothing to report here in the UK. I think it's very, very boring at the moment. The excitement and all the money just remains over in the US market. And just on that subject, this does lead me on to an interesting UK-based company, which is listed in the US, which IPO'd recently, that ARM company, who designs chips for Apple and other organizations, especially the low-powered chips. They soared up at one point over 35% in aftermarket trading yesterday. Not sure where it'll end up when this video goes live, but really, some of the moves we're seeing at some of the stocks at the moment are just insane. But whether it will last or not, who knows? Again, I don't try and time the market. I just keep making sure I'm consistent in dollar cost average over that long run. But definitely some exciting times at the moment for investors. Anyway, let's now jump onto the portfolio and see how we're actually doing. And I will tell you about a big change that I've made inside the account. Now, as many of you will know, InvestEngine have finally released self-invested personal pensions, or SIPs, inside their platform. So as soon as they were announced, I wanted to give it a try. So I've now opened my own self-invested personal pension on the InvestEngine platform. So if I scroll down here, I can see it's all inside my account, and there is £200 inside what I've called Toby's simple SIP, because I'm a simple man at the end of the day. I like to keep things very simple. So my plan at the moment and how I want to move forward is with my investing. I still want to put £1,000 a month in across my investing accounts on InvestEngine. What I've gone for now is £800 into my ISA, and you will see that first £200 has gone into my SIP. So £1,000 is total, split 800, 200 into my SIP. Now, I'm not going to go into huge amounts of details about how a SIP works and all the little ins and outs. In fact, I did a video recently about talking about the differences between an ISA and a SIP. And there are lots of little details, lots of little caveats. So I'll leave those for you to research. As always, it's important for you to do your own research and understand where that might fit. And it is a very, very powerful account to help grow your wealth, because you also do get that tax benefit as well. Now, that £200 a month I've put in at the moment will eventually get tax relief. I'm not sure exactly when that will come through, so we might see that in 6, 8, 10 weeks. Not exactly sure when InvestEngine will pay that money, but that tax relief will get claimed back from HMRC, will get thrown into my account, and then over the long run, that will help compound and grow my wealth. Now, remember, you can't withdraw that SIP until you are older, kind of more toward retirement age, 57, 58 at the moment, and that might get pushed back as we go through the years. But with that additional benefit, it might get larger than an ISA, for example, but it's not tax-free and you can't take it out straight away. Again, there's lots of ins and outs, but that's all in another video. I'm not going to go into the details here. Now, just on that simple SIP, if I click into it, you can see what I've done. I've really just kept this one super simple for now. I can always change it, but for now, I've just gone into the Vanguard FTSE All World Fund, this VWRP. So it's the accumulation version. It's a global index fund. Yes, I know there are other ones available. And yes, I did many videos on different ways you can put portfolios together. Yes, you can do a developed world and an emerging one. But for now, I just wanted to keep things really simple and just let this one kind of set and forget. Because it's my pension, I want to kind of move my little tinkering hands away from it and just have this one super simple. It's quite nice as well. It's really irrelevant, but to see some kind of profit in there is quite nice already. just because the market's been going up and up and up. So that's a really cool one. We'll keep that one posted for the time being. Another area I might touch on later at some point is probably the business account. Potentially, because I run my company as a limited company, I may start to put some cash in here to get some interest as well, but I might touch on that one in future videos. And just on that note as well, look out for later on in the year, I'll probably make sure I do a kind of best SIP account. I'll also do a best ISA video, looking through all the different platforms. Just as a reminder, on the SIP platform, 0.15% as a platform fee, capped up to £200, which does make it, I believe, the cheapest SIP platform in the UK at the moment. But I'll go into more details when I do a bigger kind of main SIP video later on as we approach that new financial year. So I'll just put the SIP to one side for a moment and we'll just stick with the ISA. You can see the ISA is having a great year so far, up nearly 15%. I'll just click into this one now. As usual, that money's gone in at the start of every month. I just put in my money at the start of every single month. Used to be £1,000 contribution and is now going to be £800 moving forward. As you can see, if I just expand it over kind of that 6-month time period, as the market's just been going up and up and up, I've just been getting those average returns of the market. Many regular viewers will know this portfolio very, very well. It's kind of my own tinkery version of a global index fund. And I've just broken it down into the various constituent parts across the world, really to just play around with the platform and also reduce my costs. My average cost across the entire platform, as you'll see here, is 0.09% a year, which is extremely low cost. And bear in mind, on the DIY platform with InvestEngine, there are no platform fees as well. So that's a extremely low cost to actually invest my money. As you can see here, then over the last 6 months, pretty much everything's in the green. As you can see here, the S&P 500 really leading the charge. Everything else kind of, yeah, not doing so much. But the developed Europe fund, though, has surprised me a little bit. That's done pretty well. And as you can see, if you look at the purchases, I think this just really highlights the benefit of dollar cost averaging. As the market's been going down, all these little black dots are where I've actually put money in. Again, I haven't tried to time the market, but what I do benefit from is when the market goes up, my average cost stays very, very low. Always an important thing to go through on that one. If we just look on a shorter time frame over the last month, for example, you can see the FTSE 100 letting us down there at the bottom and the S&P 500 really just flying. But the good thing here is the S&P 500 makes up a larger portion of this portfolio. As always with these portfolios, I do share them. I will put the links in the description so you can have a little look and do your own research. Please don't ever copy them. Always do your own research and make sure you find a portfolio that's right for you. It's always really, really important. But I do share that one, and I also do share this one, Index and Chill. It's a single funding global index fund for you to have a look at. And it is my personal opinion, and it will remain my personal opinion forever, that the majority of anyone's investment portfolio, if you want to build wealth in the long term, should just be a global index fund. But hey, you can disagree with you in the comment section. Now, if you want to get yourself started on the InvestEngine platform, don't forget that I always leave a link in the description below where you can get yourself some free cash all the way up to £50 for opening an account and also depositing money into the account. Other terms and conditions do apply. Make sure you read those ones in detail. But thank you to many, many people who've used that link to sign up. It does also help support the channel moving forward. So I'll pretty much wrap this one up here for this portfolio update. As we head into this brand new year of investing, my plans remain exactly the same, and that is to invest consistently every single month. And it is quite interesting as well, just how quickly your investing portfolio can grow as you make those deposits. It always starts small when you put those figures in, but over the years and over those months, it does add up. And it's really, really good to see the fruits of those labor. Bear in mind that even if this account was deeply in the red, my philosophy and my strategy wouldn't change. Although it's nice to see that green in the account and thinking you're up money, really until you make that sale, until you actually recognize those gains, they are just gains on paper. But hey, it's nice to see that kind of compounding effect over that short time period at least, but we've still got many, many, many years to go. So the strategy will remain the same. I'm going to deposit into the ISA and the SIP at the moment. I'm looking forward to seeing how that one goes, and I'll keep you guys posted as that money gets in the account, and we will see that every month moving forward. But anyway, thank you so much for tuning in as always. Let me know in the comment section how you guys are getting on as well, and I'll see you in the next video. As always, happy investing.